Okay, so today we're going to talk about a really fascinating story coming out of South Africa. It's all about financial engineering, and it's basically this: how a relatively small key can unlock a massive door. Let's get right into it.
All right, so our story kicks off with this number, $350 million. Now, don't get me wrong, that's a ton of money. But here's the thing, it's just the seed capital. Think of it as the down payment, the starting point for something way, way bigger.
And this is the goal, $10 billion. Yeah, you heard that right. That is nearly 30 times the initial amount. Those two numbers, they just feel like they're from different planets, don't they? And that right there is the central puzzle we're going to solve today.
So how on earth do you turn 350 million bucks into 10 billion? Well, it's not some kind of financial magic trick. It's a really clever strategic tool that's been designed to fix a very specific and very big problem that South Africa is facing. But you know, to really get the solution, we've got to understand the problem first.
And that problem? It all comes down to a huge bottleneck in the country's power grid. It's like a fundamental roadblock holding everything back.
Now, this is what I find so interesting, because it really clears up a big misconception. You might think the problem is a lack of green energy projects, but that's not it at all. South Africa has plenty of wind farms, tons of solar projects, all ready to generate power. The real issue is that there's just no room for them on the electrical highway. It's like a massive traffic jam. The transmission grid is completely full.
And this really shows you where that choke point is, right? You've got all these great renewable projects on one side ready to go, and on the other side you've got homes and businesses just waiting for that clean energy. But the bridge connecting them, that transmission grid, it's just too narrow. It needs a huge upgrade. And that, of course, is insanely expensive. So the big question is, how do you possibly pay for all that?
Okay, so this is where that clever financial solution comes into play. And it's not just about throwing money at the problem. It's about using a lever, something small that's designed to move something much heavier.
So this tool, it's called a credit guarantee vehicle, or a CGV for short. The easiest way to think about it is like insurance for investors. You got these huge investors, right? Like pension funds. They have mountains of cash to fund giant projects like this. But they get nervous because of the risk. So what the CGV does is it uses that public money to act as a safety net to absorb some of that early risk. And that makes the whole thing a much safer and way more attractive bet.
Okay, so here's how all the pieces snap together. First, the World Bank puts in that initial $350 million. Then, the Development Bank of Southern Africa, the DBSA, they manage the whole thing. And what they do with that money is they offer guarantees, basically a promise to private lenders that says, hey, if something goes wrong, we'll cover some of the losses. All of a sudden, this giant, kind of scary grid project starts to look like a really stable long-term investment. And just like that, private money from all over the world starts to pour in.
And this is what we mean by the leverage effect. You see that small bar? That's the public money, the guarantee. And what it does is it de-risks the project just enough to unlock that massive bar of private investment. It's all about using public funds strategically, not to pay for the whole project, but to build confidence and to, crowd in all that private capital.
So you got to understand, this isn't just a clever one-off deal for South Africa. This is actually part of a much bigger strategic shift in how the entire world is starting to think about funding these massive projects. What we're seeing here is a real move away from the old way of doing things. It's basically a global admission that governments on their own just can't foot the bill for the kind of infrastructure we need in the 21st century. I mean, especially for something as gigantic as a global energy transition. Let's just compare them side by side. The old model was pretty simple. The government would just borrow all the money it needed and in the process add billions and billions to its national debt. This new model, what they call blended finance, it's all about partnership. You take a little bit of public money, you combine it with a whole lot of private capital. The goal is exactly the same, build the infrastructure, but you do it without burying the country under a mountain of unsustainable debt. So what does this all actually mean for the future? Well, if this thing works out the way it's supposed to, the impact could be absolutely transformative. And this whole plan, it's set to roll out over the next 10 years. That first approval, that's really just step one. Pretty soon, this guarantee vehicle will be up and running, pulling in more partners, and then the real work begins, building and modernizing that grid with the full $10 billion being put to work over the next decade to make it all happen. So let's just break down why this is such a big deal. For South Africa, it means they can finally break that energy logjam and speed up their switch to renewables. It means they get to upgrade their most critical infrastructure on a massive scale, but without going broke.
And, maybe just as important, it sends a huge signal to the rest of the world that South Africa is a stable, attractive place to make long-term investments.
And all of this leaves us with one last really big question to think about. We all know the global energy transition is going to cost trillions, with a T. That's way more money than governments have on their own. So, if this blended finance model really works in South Africa, could this be the blueprint we've all been searching for? The key to funding our planet's entire shift to a green energy future? It's a pretty powerful thought. Thanks for joining me.